Welcome back to Morning Moves. Get a closer look at the state of home improvement. Retail and Home Depot reports earnings tomorrow morning. Analysts are expecting earnings to come in at $4.71 a share on an adjusted basis. Revenue is expected to come in at $45.5 billion. Now, Home Depot is up nearly 9% this month and 22% off of the April lows, but it is underperforming the S&P 500 year to date. Time now for Options Corner. Joining us to take a deeper look at Home Depot's Rick Ducat, lead market technician here on Schwab Network. All right, Rick, what trends do you notice about this chart?
Well, you can see Home Depot is underperforming the S&P 500, the broader market here. However, it's part of the consumer discretionary sector, which has been outperforming. So Home Depot is kind of lagging behind both of these benchmarks. But one of the reasons I like to talk about Home Depot is it's a really good example of how correlation works. We have other things that are more closely related to Home Depot, Lowe's, its chief competitor, and the home builder XHB ETF. So we can see Lowe's and Home Depot almost exactly correlated. -1 to +1. +1 is perfect correlation, very correlated to XHB, not really that correlated to the S&P. So something to consider, food for thought. Home Depot and Lowe's are a classic kind of pairs trade opportunity often. We can see, though, volume nodes here on our chart stand out, 410 and 390 for our Home Depot yearly chart here. We can also see some notable boundaries here. Our red line, 420, is where price repeatedly topped out back in the first half of the previous year, but also our green line, 400, a frequent low point and then high point. That's about where we were hanging on in Friday's session here. So be on the lookout for a break below 400, or perhaps also our light green line, 396 here, often a high point for price, a few times there, and a consolidation point there. So to the downside, 390 ultimately. To the upside, 410, perhaps 415 or so.
All right. Thank you, Rick. And now for an example trade, we've got senior options contributor Tom White and co-host of Fast Market. So, Tom, what's the approach for an example trade for this one for Home Depot, given that we've got earnings coming up?
Yeah, I think one of the keys is you take a look at the short-term moves that we've seen. You mentioned up nearly 9% so far just this month. So a lot of optimism going into this report. Implied volatility levels, while elevated, they pulled back on this rally that we've seen over the last few weeks here. So that's not giving us much option premium in the market. But I looked at a neutral to bullish, relatively conservative type of trade here. If you think the stock's going to go higher, remain where it is, or maybe just go a little bit lower. Rick mentioned that the 290 level or 390 level as a potential area of support. So looked at a short put vertical here where I can give myself better probabilities of success. Going out to the August 22nd weekly option series, so really short-term positioning, 4 days to expiration, earnings play type of trade here, where I'm going to sell an out-of-money 390 strike put. It's nearly about $9 out of the money to the downside. Then to stay risk defined, because it is an earnings event, anything can happen, we'll buy the 380 strike put. So a short $10 wide, neutral to bullish put vertical. You're collecting roughly a credit of about $2.50. That's how much you can make, $250 per spread, with $750 in risk. Now, that doesn't sound that great, right? But then you start looking at the break-evens. 387.50 to the downside. That's when I start losing money below that level. And that's a probability of finishing out of the money on that break-even of about 70%. That's what you want, that higher probability of success on this one. So this might be the way to play it. If maybe you're expecting the stock to go higher, you just get to keep that credit, or you give yourself that cushion to the downside, taking advantage of the near-term higher implied volatility levels to give yourself that nice cushion. Option market pricing in about a plus or minus $13.50 move. It's about 3.5%. That's about that break even right there also. So playing the odds on this one.
All right, playing the odds on this one. That is a put vertical example trade there for Home Depot. Thank you, Tom.